Ladies and gentlemen, welcome back to the channel. We need to talk about AMC stock and what is currently going on here. I want to look at the charts. I want to go over some news that broke out over this weekend. Some pretty interesting stuff, like the fact Adam Aron is the highest paid corporate CEO in Kansas City. I find that strange considering AMC stock is down massively over the last year or two. We're going to talk about that, as well as a very interesting article. This article, actually, it says, AMC stock bull versus bears. Is the stock headed for $45 or $5? Wall Street is divided when it comes to AMC Entertainment. Is the stock too cheap or too expensive? I think that is a very interesting topic that I would like to cover with you guys here in this video. So let's go ahead and get straight into it. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So we'll actually start with this article. I know we have a lot to get into here in this video, but I think this one is interesting. So it says Citigroup maintains a bearish outlook on AMC, lowering its price target to $4.75 per share due to pandemic-related changes. And I'm also going to give you guys kind of my opinion on this. This is more so based on fundamentals. Obviously, if we get a huge short squeeze at any time, that could obviously be much different here, right? Consider that. But it also says B. Riley's has a neutral rating on the stock, but has set a bullish target of $45 per share, driven by strong box office results and potential expansion. Citi's forecast, AMC is headed for $5 per share. Citigroup recently reiterated its bearish outlook on AMC Entertainment shares, maintaining its underperform rating and lowering its price target from $15.50 to $4.75. That's a huge reduction of a price target on a percentage basis. That's actually insane. You don't see analysts all too often lower their price target that much. What is that? Like a 75% decrease of their prior price target? Interesting. It says this decision followed a thorough evaluation of AMC's management's initiatives, particularly those regarding the company's equity offering. 6 months ago, Citi initiated its coverage of AMC with a sell rating. In his write-up, analyst Jason Bazinet focused on the movie theater chain's strategy to reduce its leverage and highlighted two narratives that continue to circulate in the aftermath of COVID-19. It says, the first narrative centers on AMC's substantial debt accumulation during the pandemic due to diminished movie theater attendance. Currently, the company is in the process of recovering from this financial strain. The second narrative relates to AMC's emergence as a meme stock during the pandemic, which led to a significant overvaluation of its shares. At the time, much of Citigroup's skepticism stemmed from the uncertainty about how AMC's share price would be affected when the company converted its preferred shares, the APEs, into common stock. Additionally, based on the Hollywood Stock Exchange predictions, a moderate recovery of approximately 25% is anticipated in 2023 compared to previous years. However, box office revenues are expected to remain several $billion below 2019 levels. While this projection is not infallible, it provides a general sense of the expected recovery trajectory based on the performance of various movies. Despite the challenges, AMC's CEO Adam Aron's management has garnered praise. The Citigroup analyst noted that Aron adeptly navigated the company through exceptionally challenging circumstances. AMC faced an unprecedented situation when its theaters were temporarily shuttered due to the pandemic. AMC's response to this crisis included the issuance of APE units and efforts to consolidate them into a single class of stock. Furthermore, the company aimed to capitalize on what could potentially be an inflated equity value to regain control over its debt. Given these circumstances, the analyst commended AMC's leadership. So that's the bearish argument for AMC. Now, here's the bullish argument. B. Riley says AMC is headed for $45 per share. While not exactly bullish on the company, Eric Wold of B. Riley has put forth a very bullish price target for AMC stock, suggesting it could eventually reach $45 per share. His forecast is based on the assumption that AMC will soon return to its pre-pandemic levels. According to Wold, if AMC were to regain its previous levels of profitability and potentially explore expansion opportunities beyond its current operations, it could drive a bullish surge in the company's stock price. Furthermore, B. Riley suggests that thanks to the conversion of APEs, AMC could now possess the flexibility to consider new strategic options. These options might include adding new theaters or diversifying through acquisitions. The take from the street, and this is interesting. It says AMC is currently experiencing continuous improvement in its business fundamentals. Based on its current trajectory and box office forecast for the next year, the company is expected to reach pre-pandemic revenue levels by 2024 or 2025. While a price target of $45 appears overly optimistic, $5 per share seems too pessimistic. There are compelling reasons to consider further upside potential for AMC from its current share price. Recently, the company successfully raised $325 million in new equity capital by issuing 40 million shares. It's worth noting that AMC still has 350 million shares available for future issuance. If AMC were to issue the remaining 350 million shares at the same price of $8.12 per share that it achieved in the sale of the initial 40 million shares, the company would raise approximately $3.5 billion in cash. This amount would be nearly 3 times the company's current market capitalization. While this potential issuance may have bearish implications for AMC's share price due to dilution concerns, it also represents a positive perspective. It suggests that AMC will emerge next year as a significantly more robust business with substantial liquidity. This provided financial position could enhance the company's resilience and growth prospects. And I think that is really the main point to point out. That if you're buying AMC stock right now, $5 per share, way too pessimistic. $45 per share is pretty optimistic on a fundamental level. Now, you could make the argument that obviously fundamentals are a part of it. Short squeeze is the other part of it. What's a fair valuation? What's a fair price AMC stock should be at right now? Probably, fundamentally speaking, around $20 per share. That's just my wild guess. $20, $30 per share. That doesn't seem too crazy to me. Should AMC stock be lower than where you were in January of 2021 when everyone thought the company was literally going bankrupt? I would make the argument that that does not make a whole lot of sense. Why AMC is $8 per share now and you're low in January before this rally that we've seen, right? The first round of kind of the MOAS, if you will, or at least the first stage of it. You were at $10.35. Why are you at $8? So I think even for more value-oriented investors, AMC stock looks pretty dang attractive here with a lot of potential upside. Now, that's something that I think is very important for the next segue of this video, which is kind of what I expect for 2024. Now, obviously, predicting a MOAS has failed multiple times, so I'm not going to sit here and say that is obviously a guarantee. That's a very real possibility, right? Especially if fundamentally the business continues to do well. If AMC can get its profit margins higher than where they were pre-pandemic, that's a total game changer. And I used to talk about this a lot more as AMC was trying to get profitable, and now AMC is slightly profitable, at least in the last quarter. I think it's important to kind of have you guys remember this. And again, I used to say this all the time. Something crazy happens when you're a business that has been around 100+ years and you're basically forced to almost go bankrupt. What do you do? What do you logically do if you're a legacy company and boom, the Rona happens and you're literally forced to scrape together pennies to pay your bills? You cut back on things you don't need. You close theaters that were money losers. That's the bottom line. So AMC today should be a much leaner business than what you've seen pre-pandemic. AMC should be, in theory, a much more profitable business once we get everything back to pre-pandemic numbers. Now, I think there's something that was kind of born from the Rona as well. People just really want to do things, and I don't think that's something that's going to go away anytime soon. So once you get back to really pre-pandemic numbers, I think you can see even higher numbers. Now, is the profit margin 2% again like it was before, or is it 5%? Could AMC bring that to 10%? Those are all questions. And obviously through acquisitions, that becomes a little bit more likely. But long story short, AMC's valuation should deserve a higher multiple now, given what I just said. So I think fundamentally speaking, AMC stock is not worth $8 per share. It's worth more like $20 or $30 per share. And I think AMC will grow into that over probably the year of 2024. So I think if you're buying AMC stock right now, short squeeze or not, makes a lot of sense, and you could be looking at hundreds of percents of return over the next, couple of quarters here. That's very possible. If AMC turns another profit, and then they raise guidance, and they turn another profit after that, I would, argue that AMC is probably not going to raise that many additional shares. And AMC stock would trade higher. Now, you guys got to remember, AMC did just raise a lot of capital. They just sold 40 million shares on the market. But if AMC continues to turn a profit, most of their debt is not actually coming due until 2026 and then even 2030. So relatively speaking, there's quite a bit of time to turn a profit, to get your shares higher. You don't want to dilute shareholders at $8 per share. Maybe at 20, maybe at 30, maybe at 40. I think that's, something we can't really predict, number one. But again, it's one of those things where if we were going through a short squeeze, would dilution actually stop it? Probably not at that point. So I think AMC can be a little bit more strategic here, especially if, again, they are becoming a profitable company. Now, let's go ahead and take a look here at some of the technicals and look at all of these green circles, right? A lot of bullish indicators that are starting to flash here. You have a short-term KST, an outside bar, which is bullish, a relative strength index flash right here. That is when the RSI briefly turned positive. And that was back here, what day was this? September 25th. You had a fast stochastic, FSTO, I don't know if I'm saying that right, and another relative strength indicator right here. Now, it's important to know that if you're oversold, then you go back into a normal range, which is in between 30 and 70, the neutral level being 50, you tend to get a follow-through rally. It's one of those things that a lot of algorithms trade based off of the RSI. So usually on any bounce or right before a bounce, you might see the RSI start to go into a neutral kind of normal level, and then you can see that rally really start to take hold once you do get above 30. And AMC stock closed Friday at 30.58, so you are technically slightly into the normal range. The MACD has also been getting more bullish for a while now, so you're seeing some really good inflows here for AMC stock. At the same time, the stock is trading sideways. You're now above your 8-day moving average, which is at $7.86 per share. There's a lot of reasons to think that AMC stock could, have quite the move to the upside here over the next couple of weeks or so. So I would not be betting against AMC right now. Actually, quite the opposite. And that's actually what you're starting to see here with some of the option activity specifically. Last week, you had a ton of option activity on the call side. 125,000 calls out the money, 5,500 calls that expired in the money. Unfortunately, you didn't close above $8 per share, so there was about 15,000 calls that just did not expire in the money, so that is not great. On the put side, you have out the money puts at 37,000. In the money puts at about 16,000. So just 3-4 times the amount of call activity than put activity last week, and this upcoming week is the same story. About 7,500 calls currently in the money, about 44,000 calls that are out of the money for next week, and about 11,500 puts in the money and about 20,000 puts out the money. So again, another 2-to-1 ratio for calls to puts, and I think this sets us up for a short-term rally, of course, but then I think it really sets us up for a longer-term rally as well. It's been a long time since you have seen more calls than puts, and you're really at that moment in time where you're finally starting to actually see the momentum switching. So I think that's important to point out. Also, on a technical basis, I think it's worth drawing just a simple trend line here. You could draw it from back here from January of 2022. You could also draw it using these lows. I think you get relatively the same picture here. And what it's basically saying is, you're pretty much at that lower end level. Actually, you should probably just connect it to these. That might make a little bit more sense. So what you can actually see right now is if AMC stock can get above about $10 per share, that could be breaking a longer term trend, really hitting that bounce level. And then if you connect this trend, you could see some really big upside if you start to get above about $45 per share. So, I don't know when that'll happen. I'm confident it will happen at some point. Who knows exactly when? But if you really break above $45 per share, and obviously over time, this trend line is going to get lower over time, right? In a couple months, it's going to be like $25. But once you break above this, you could really see AMC stock run, and that's where you could ultimately get the MOAS. So if you're in the MOAS camp, going from $8 to $25 or $8 to $40 is great. You can make a lot of money on options, especially if you're watching these videos and you're seeing the momentum actively switching, like literally it's happening right now. And if you're bullishly positioned for that, you can obviously make a lot of money, but above this trend line, and we'll just keep this here on the charts, that's where things could get really crazy. You could even connect it back to here if you really did want to. So that is something I also noticed here looking at the chart. So this is going to do it for this video. I wanted to give you guys my perspective on this whole situation. You guys need to watch the video coming out here at 4 p.m. as well. That one's going to be very important. We're going to break down everything you need to know for this upcoming week. All the economic data, the government shutdown that is averted, essentially. The technicals, kind of what I expect for AMC next week, and much more in the next video. So stay tuned for that one. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.